Welcome everyone to this One Utah conversation. I'm Alicia Hart, the director of the Startup State Initiative here at the Governor's Office of Economic Opportunity, and we're hosting this video series to talk with our partners and sponsors of the One Utah Summit, which is Governor Cox's business summit in Northern Utah and Rural Summit in Southern Utah University, happening every spring and fall. Today, I'm having a conversation with Antonella Packard, the director of the Utah Small Business Credit Initiative. And I am so thrilled to have her here. Antonella is a former entrepreneur and banker, super knowledgeable. And today we're talking about how businesses can access capital. So she is the perfect person to talk to about this. Welcome to the podcast, Antonella.
Thank you, Alicia, for having me here. And it is one of my favorite topics. And wow. And as director of the Utah Small Business Credit Initiative, this is a privilege for me to be able to speak to entrepreneurs and for those looking to access capital, of course.
Amazing. Thank you so much. So today, like I mentioned, we're talking about access to capital for Utah entrepreneurs, and this is a little snapshot of one of the breakout sessions at the One Utah Summit. I'll be hosting the Entrepreneur Ecosystem Breakout on April 12th. Antonella will also be there, one of our panelists, and we'll be talking about the entrepreneur ecosystem here in Utah, talking about what resources are available. We have some incredible guests. You can see them. If you want to learn more about the One Utah Summit and how you can go, visit oneutahsummit.utah.gov, and you can learn more about that panel. And so right now, we'll hop into access to capital. So when we talk to small businesses in Utah, and, as part of my role as the director of the Startup State Initiative, which launches in April as part of that summit, and as part of my former role as director of the Utah Small Business Credit Initiative when we were getting started, I heard from a lot of small businesses about what their needs are in the community. And by far, the number one thing they talk about is access to capital. Can you tell us what capital options are available in Utah for small businesses?
First of all, that access to capital is essential for small business owners. It really is. And that's because it enables them to start, grow, or sustain the business that they have or they're planning to have. What's interesting is that small businesses often need more resources to expand and to compete with a larger competitor. And that access to capital is key to overcoming those challenges, of course. And they say that capital is the lifeblood of any business, but especially small business. Now, Utah has quite the lending infrastructure. Capital is the lifeblood of business. And so it behooves us to find out what resources are available. Now, your initiative, the startup one, has some resources, which I'm excited for you to unveil what this is going to be. However, let's talk about what's available. Traditional lending, of course, is something that is available and that we all are aware that we can go to a bank or a credit union. Also, there are organizations called Community Development Financial Institutions, or CDFIs, that lend also to the small businesses. And their requirements are not as strict as, say, a bank. However, they do have their own restrictions. Also, there's a small business grants depending on what municipalities you go to. Like, for instance, certain municipalities have funds in order for people from that particular area to, say, refurbish their storefronts, for example. And there's also other types of lending from, for instance, what they're called revolving loan funds. And these are usually run by either county or city, that sort of thing. But again, not every city has it, not every county has it. So it's just a variety of things that can be done. Then there's also the bank of, friends and relatives, and also our own bootstrapping, which many here in Utah tend to do, and which is self-finance, or some folks go through and tap into their own assets. Not something that I would recommend. I'm telling you this as a former entrepreneur. However, that's also another possibility.
That's a great summary. Okay, so you covered a lot of different types of financing. If you're a business listening, you're probably like, yep, check. I've done a lot of those options. So specifically, because your background is in banking, which is great. And so looking specifically at debt, what kind of business is a good fit for debt? Because as debt funding it's very closely tied to profitability, right? So if you're a startup, if you're someone in need of financing, how do you know if debt's the right fit for you, or if you should stay bootstrapping, if you should look to venture capital or look to another source of money?
Well, this is interesting because um, hmm, this is quite the loaded question because uh, loans, of course, are a big financial commitment, and so before you even start thinking about applying for a loan, you want to find out if you can carry the debt and for how long, and be realistic about when you're going to pay this off, and to what degree does a loan help with to advance your operation. For instance, if you actually look at, well, if I get, let's take an example of a piece of equipment, and this piece of equipment is going to have you complete, say, for example, manufacturing 10 times faster, and that means that you can get product, and say that you had a backlog, then investing in that piece of equipment seems to be a good move for your business because it is going to help you with the backlog and get product out faster. And that's just one example. It could be that maybe you have a seasonal business and you want to buy a piece of equipment that will allow you to operate year round. That means more source of revenue for you. But again, these are things that you need to make sure that it is actually making sense for you to be able to take on debt. And if realistically your projections and also your cash flow allows you to go ahead and say, take that step.
Absolutely. Yeah. Yeah. Well said. And so you said one phrase. And so for any listeners who are maybe new to this topic and conversation, what do you mean by carry your debts?
That means being able to pay for your monthly payments and your obligation to the lender.
Okay. Thank you so much. That's a great point. Okay. So, and I think that when you talk about debt funding, I think also looking at funding from a phased perspective is also really smart. As a new startup, I think businesses are going to have a lot of different contexts they come from. I think if you're a startup, meaning you're under I think traditionally banks will look at you as a startup if you're maybe under 2 years old. Correct me if I'm wrong, Antonella. If you're in the stage where you're giving them projections, but you're not profitable yet, you're needing a big investment to get product made or to get to the point where your product is being delivered to market. I think those are the stages where it can be kind of complex. So I would say, an interesting thing about debt is that there are actually a lot of very unique lenders offering debt products to the market. And sometimes I think we tend to bunch them all together. We say, get a loan as if it's all the same. And you mentioned this a little bit earlier. You talked about, you've got your banks, you've got your credit unions, you've got your community development financial institutions. So if you're maybe a new business, if you're a startup, if you don't maybe have the 2 years in business, if you don't have the profitability yet, can you tell me maybe about CDFIs and why they might be a great fit for you, and what CDFIs are available in Utah? Like where should they go?
Well, there's few in Utah. There's pretty much about three that I can give you that are Swasso Business Center being one, the Utah Micro Enterprise Loan Fund being another, and also MoFi, MoFi, that actually lend here in Utah for businesses. And that is just three of the what we call community development financial institutions. They will lend. And their underwriting criteria, and that means people or a system that looks at your ability to pay and look at the business or what have you, that determines pretty much the strength of what you'll be able to obtain. Some of these entities have requirements, of course, that you have to fulfill, and but at least it is a lot less onerous than, say, a traditional financial institution. Not to say that it doesn't exist. There is an SBA microloan that does lend to a newer business. There is a cap on the, there's a limit to how much that can be lent, for example, 50,000, I believe is the top.
Right. And is that the Community Advantage program?
I believe it is. And so at this juncture, what I'm saying is that you have to see what options you have available. And one thing that I would recommend for you to do is before you give your financial information, research and make sure that you're getting as much information as possible before anyone pulls your credit. One of the factors there is that every time there's a hard credit pull on your credit, it actually lowers your credit score. So you want to be very judicious. You want to be very careful as to when you're going to be shopping around for, say, a loan or look at your options. There's folks that say, well, what aren't there grants or anything like that that I could have? Well, it depends, because there's some that are industry specific. But for the most part, these are very competitive, and they're not easy to get. And I think that many folks think that, oh, I am a small business in the tech sector, I should be able to get funding
Right.
from a grant or what have you. Well, the answer to that is not really. There are programs, and we have them on our website at GOEO, at the Governor's Office of Economic Opportunity. And those we will post. And the exciting thing is that there's going to be more resources to find out more of this type of information coming up soon. And that will be announced, I believe, Felicia, at the One Utah Summit.
Yeah. Are you talking about the startup website?
Yes.
Yes. We have a new website coming on April 12th. At the One Utah Summit, we'll be talking about the Startup State Initiative and our new website at startup.utah.gov. It'll be sharing a lot of resources, so it'll be listing a lot of these providers. And so we've got a startup funding section and a growth stage funding section. We're really excited about that. And so if you tune in for the summit, if you're in attendance, or you can kind of watch social media, we'll be launching it that weekend. And thank you so much, Antonella. That's great information about CDFIs. Like Antonella said, Utah has a really strong banking infrastructure, not quite as many microlenders. I think that's something that's currently being really built out. There's a lot of partners investing in that infrastructure right now in Utah to support, Utah's growth. There's a lot of businesses, a lot of growth in that. I think that funding side of it, making sure the money's available for startups, is really, really significant. And so speaking of investment into that, let's maybe move a little bit to the Utah Small Business Credit Initiative. So, Utah Small Business Credit Initiative, this is $69 million to expand access to capital for small businesses in Utah. It is a U.S. Department of the Treasury program, but it is a grant that Utah received. And I was, really lucky to be here when that happened, and I helped start the program. And then Antonella is incredible and has brought her banking experience to really grow this program to the next level. So let's talk about this program and what it does for small businesses and how it's really helping to strengthen our microlending, infrastructure to really add money out there for small businesses. So as you know very well, the program has the initiative has two programs. So you've got the Utah Small Business Credit Initiative, which is housed under the Governor's Office of Economic Opportunity. Lots of names I know. Inside that, there is a program called the Capital Access Program. So Antonella, can you tell me about the Capital Access Program, and can you tell me specifically how this program is great for startups and those really on the cusp of being eligible for lending?
Well, first and foremost, let's talk about the fact that you mentioned $69 million. Now, does it mean that we're sitting on $69 million to lend? First of all, I'm going to say there's a way that our program, the Utah Small Business Credit Initiative, or USBCI, is able to disperse these funds. And we get these funds in 3 rounds that the federal government or Treasury calls tranches. And so every time, so it's not like we have access to those $69 million right away. Also in lending, $69 million, I have to say, is probably going to go fairly fast. Mm-hmm. And so part of this is that these 2 programs that we have under USBCI, it's the Capital Access Program, which you just mentioned, and that one actually motivates lenders to finance more projects by offering some loss protection. What does that mean? That means that we help mitigate our program mitigates the risk to the lender so that they're more prone to lend to businesses that are perhaps not fitting into the criteria of a traditional loan. And so by making this more accessible, then we ensure that a broader range of small businesses can access capital that they need. Now, ideally, this is for somebody that's starting out. Perhaps they don't have the history, or they've been in business for a few months, or what have you. But you go through, not us here at the Governor's Office of Economic Opportunity, not through the USBCI program, but you can find the information on how to access this through our website. Now, there are several organizations that are actually facilitating this lending, and they're called, many of them are CDFIs, or Economic Development Organizations. So you would be looking at Swazo Business Center. You'll be looking at, say, MoFi in this case. And also, there's some credit unions. However, you have to remember that credit unions are based on membership and they serve a particular location. So we do have a credit union that does serve, but that's southeastern Utah. So that's Grand County and areas through that it actually does help, and you can actually access these loans through that. The loan amount typically it could be less, but it's between $25,000 to $250,000. Does it mean that you're going to get the $25,000 or the $250,000? Not really. This is going to be up to what your business needs, what the capability of the business is to pay, and this is something that at least gives you an opportunity to obtain some of that startup injection, and that's what this CAP program is designed to do.
Yes, well said. The Capital Access Program is a great option. It's really about expanding accessibility at its heart. And so if you're a small business who is struggling getting approved for a loan, if you're kind of in one of those categories of like you're a new startup, you're not quite profitable, you're in those beginning phases, the Capital Access Program can be a great option. And like Antonella said, what it really does is it helps say wherever a lender's underwriting is, it makes it bigger. So it really expands who can get a loan, and it'll depend a lot on the different loan providers, like Antonella said. If you're interested in applying for the Capital Access Program, Antonella, what should small businesses do?
Well, they should go to business.utah.gov/USBCI/, and you'll be able to find the lenders and a little more information about the program and how it works.
Perfect. And like Antonella said, you can apply through a lender. You don't apply directly through the governor's office. You go through one of those financial institutions. And that's the Capital Access Program. So moving on to the next program. So the Capital Access Program, great for accessibility. You're going to see more just traditional interest rates. That's correct, right, Antonella? Yep. The next program is called the Loan Participation Program. So we talked about startups. We've talked about kind of newer businesses and really needing to get funding. The Loan Participation Program is built more for growth stage businesses. And so, Antonella, when I talk about a growth stage business, why is the Loan Participation Program a good fit for a growth stage business as opposed to maybe a brand new startup?
Well, this one actually is a little bit more robust. And this one works with also the Economic Development Organization in tandem with a financial institution. So, or it could be a credit union or a bank. Mm-hmm. And what it does, it enhances the small business owners' access to funding. And we at the state acquire up to 50% of the small business loan. Say, for example, we offer a lower interest rate on our half. So the bank or the credit union or financial or lending institution will finance the other part at their rate. So we come in depending on the time frame of the loan. Our highest one is 3%. And so when we combine the interest rate from the lender and ours together. And remember, the key point here is up to 50%, and the cap on those funds is $1 million. So up to $1 million, up to 50%.
Okay.
So,
And that's up to $1 million on our side, right?
right, our
They
side.
can purchase up to $1 million, but your actual loan could be bigger. But
It could be bigger.
Portion stays at
A limit to that as well, and that's $20 million. And the definition of small business here is anything that's less than 750 employees. So as you can see, that this is something that's generous. One thing that I should tell you about this program is that to qualify for our loan participation program or our CAP program, you cannot basically be eligible for, say, an SBA loan, a USDA loan, traditional banking loan. This is specifically for individuals and businesses that are having a struggle trying to find financing through traditional ways. So the program, what it does is, again, help those businesses that are in growth mode. This would be somebody that is trying to expand their footprint, for example, opening a new subsidiary, or they're trying to buy equipment to expand, shall we say, production, or they are trying to perhaps update their technology, for example, these kinds of things. And these are loans that are between $250,000 and up. And again, of course, we can only participate up to 50% and with a cap of $1 million on our side.
Okay. Yeah. And this program is really great for growth stage businesses, specifically if you're a business you've got a lot of traction, you're needing to make a big order for product or inventory, but you don't quite have the cash flow. That's a great place for this program to step in. And if you are interested in applying for the loan participation program, can you tell us, Antonella, what should a small business do?
For a loan participation program, you're going to go through an economic development organization like MoFi or SWASO Business Center. And they will be able to, they work with lenders and be able to find, to see, first of all, again, for example, if you're trying to get funding for a particular business, check and see if this is a business that can be financed. We've had a few individuals that have gone through different economic development organizations, but that economic development organization does not lend to that particular business. So the question is how do we access it? Well, start by having a conversation with these entities first. And you can find them once again at business.utah.gov and /USBCI. And you can find some of these entities. Again, SWASO Business Center and MoFi right now are the two entities that are right now participating in the loan participation program as economic development organizations. And they work with a network of lenders to be able to provide that financing to businesses should they qualify.
Perfect. And as you've probably heard, there's a lot of partners in this program. And so it can get a little confusing. Who's a lender? Who's an economic development organization? Aren't they all lenders because they're all giving loans?
You're right.
So you're going to apply through what we've called an economic development organization. And the partner the partner situation here, that's actually how this program has such low rates. That's why there are so many partners here. But a small business can apply through an economic development organization listed on the website, and they partner with banks and credit unions. So there's going to be a very wide reach and lots of options for small businesses that way. Earlier in this conversation, Antonella, you mentioned a rural credit union. So can you tell me about the coverage of this program and maybe about the goals of this program to ensure that coverage is statewide and rural businesses can access credit?
Well, one of the things that we know is that there's lending deserts in Utah. It's a fact. And a lot of those are pretty much in rural areas. However, we are very proud of being able to have partners that actually cover rural Utah. And both SWASO Business Center and MoFi lend statewide. So accessing them probably would be the best way is calling them or contacting them electronically to get their criteria and talk a little bit about your business and what it does. So, for example, the credit union that that we have that is actually part of our network is, but again, what's happened to them is that people saw the name and on our website and started contacting them, but their footprint is southeastern Utah. So if you were in the Wasatch Front, or you were, say, for example, in Logan, being able to get a loan through this credit union was not going to be a possibility because their charter is, and that I'm talking about the credit union, it focuses on southeastern Utah, which is mostly rural, as we know.
Mm-hmm, mm-hmm. Yeah, so very important. This program relies heavily on the lenders. So where the lender footprint is, that's kind of what the footprint of service is. And so USBCI partners with a lot of different lenders to offer a lot of different, lending products. So the lender you work with will affect things like where geographically the loan is available, size of the loan, the specific deal you get in terms of rates, percentage that we purchase, et cetera, et cetera. Perfect. Okay, thank you so much. So the Loan Participation Program, and that's the two programs under the Utah Small Business Credit Initiative. And one thing I think we'd be remiss not to mention here, the Utah Small Business Credit Initiative does have, it really serves to offer credit to people who can't access it with traditional means. In sometimes in federal jargon, we'll call it underserved communities. Sometimes we'll call this, you'll hear SETI. There's a lot of terminology that floats around as we inherit, at the state. We get a lot of jargon from contracts and our actual regulations. So Antonella, can you tell me a little bit about how this program serves to expand access to capital to all Utahns? I think really expanding opportunity for everybody.
And that's the thing. Just as the name of our agency is the Governor's Office of Economic Opportunity, this is a program that really, truly expands and makes this available to all Utahns that perhaps have not had an opportunity or have had difficulty in accessing. It could be the single mom starting a new business, for example. It could be a veteran. It could be somebody in a rural area. And it could be a business that wants to expand under 750 employees or 500 employees, depending on the program that you apply through. But the thing is that who is underserved? There's, again, very small businesses, for example, those under 10, I have to say that's an underserved category as well. And so when you're looking at this, making that opportunity available to these businesses is a game changer for them, that perhaps they wouldn't have had that opportunity had we not been around. And the truth is that the financial institutions will say, because of USBCI, we're able to make this loan. And if we didn't have USBCI, we cannot make this loan. So that's what this is about. Maybe your loan to value is higher than what the banks have a limit on loan to value, I should say. And it's around 75 or so percent and above. But say, for example, that we come in at nearly half or up to half, that we can make that loan possible. So again, it's not exactly like, how can I say that if you qualify for an SBA loan, are you going to come in with an SBA loan and think that you could qualify also for USBCI? That's not how it works. And this is something that is important for you to work with that economic development organization to make sure that you fit that eligibility criteria as well.
Perfect. Great. And so last question for you. I think that when we talk about a program like this, $69 million of federal funding, I think something important to know, whenever we got this program, and I was able to work on the development of this program, there's an interesting piece of this it's called leverage. And that's what we're going to talk about right now. And it really relates to economic development. It also relates to fiscal responsibility, which I think that, in Utah, we really stand for accountability of government programs, accountability of taxpayer dollars. And so this program actually has a component which means that for every dollar of public money, aka you, the taxpayers' money, every dollar of that money, it has to stimulate up to $10 of private capital. And 10 is the goal. Obviously, there's, depending on the program design, I think the CAP and the LPP actually have different leverages. The CAP specifically has a leverage ratio of like 14. That's 14 private dollars for every public dollar, and not to get too technical on you. But I do want to emphasize the real just like private gains coming because of this program. Can you tell us more about that and how this program really leverages very few federal dollars for a lot of economic impact on Utah?
First of all, those dollars that we have loosen the pockets, if you would, of the private dollars, which would come from banks or from CDFIs or would come from other investment opportunities. And those projects would not be able to be completed should there not be that investment from our side. So those federal dollars are the ones that actually kind of push for the private investment, or shall we say, loads that otherwise could not be made if we were not around. And this is our hope, to be able to leverage or say magnify what we have and make it in a way that the private and public dollars are actually making a difference. Not in the way, this is not a grant. Let's go ahead again and be very clear about this, because a lot of times people think that, well, my business is in Utah, I'm a small business, I live in a rural area, or I am a member of say, for example, I am a woman-owned business or what have you. That is not an automatic, shall we say, approval or what have you. It isn't that way. This is subjected to the lenders and whether they fund the kind of business that you are planning on expanding or opening or growing. So these are things that I would say are factors. But otherwise, this is fantastic because it takes the dollars that are coming in from the federal government and magnifying them through private money and making this a bigger, shall we say, impact in the state. So it's exciting.
That is exciting. Thank you so much, Antonella. We've been speaking with Antonella Packard, the director of the Utah Small Business Credit Initiative. Thank you so much for joining us on this One Utah conversation. And if you want to learn more, hear more from Antonella and myself, you can go to the One Utah Summit happening on April 12th. And to learn more, again, it's oneutahsummit.utah.gov. We'll be hosting a breakout session on the entrepreneur ecosystem. We'll also be launching the new Startup State Initiative, which I'm excited for. I think that'll be a really awesome thing. It's a new statewide entrepreneurship campaign for Utah. It's a new website hub, kind of aggregating resources. So if you're like, wow, Antonella listed a lot of different organizations and acronyms and names, it'll all be there, and you can kind of sift and sort through it on your own time. And it'll be exciting. It's an initiative by Governor Cox with his entrepreneur in residence, Brad Bonham, also in partnership with the Governor's Office of Economic Opportunity. So hope to see you there. And if you can't make it to the One Utah Summit, we'll also be, in other places, and you can learn more online. But it's been a pleasure being here with you today. So thank you so much.
Thank you.